everyone, I'm real estate economist Matthew Gardner, and welcome to this month's episode of Mind the Housing Market. You know, there's a number that keeps me up at night, 2.4. And this is why. Back in 1970, a median-priced home in America cost about 2.4 times the median household income. Today it's almost 5 times. So let's think about the math for a second. A household making $80,000 a year, they're no longer shopping for a $200,000 home. They're looking at something closer to $420,000. That's not just more expensive, it's a completely different universe. Now here's where the story gets more complicated than most people realize. When adjusted for inflation, household incomes have actually grown since the 70s. In 1975, a median household earned about $11,800, or roughly $60,000 today, when adjusted for inflation. In 2024, well, the median household income then was about $84,000. So that's a roughly 40% increase in real purchasing power over the last 50 years. That's not amazing, but not disastrous either. But home prices, well, they tell a very different story. The median home price in 75 was about $35,000, or roughly $178,000 in today's money. In 2024, the median price was $414,000. That's more than double what inflation alone would predict. So that's the disconnect. Incomes kept up with inflation and then some. So improved buying power. And home prices, well, they kept up with inflation, but then they doubled on top of it. Why, you ask? Well, multiple forces converged and they fed off each other in ways that made housing uniquely expensive. The first, supply and demand. We simply haven't built enough homes, especially in markets where people actually want to live. The number of households in the US has grown significantly. Immigration added millions more families, and as people are living longer, turnover in the housing stock has slowed, and it's slowed dramatically. And at the same time, zoning laws have become increasingly restrictive. Starting in the 70s, single-family zoning became sacred. Height limits, minimum lot sizes, setbacks, parking requirements, and a plethora of other rules have made housing harder and more expensive to build, particularly multifamily housing as well as entry-level homes. In high-demand cities, San Francisco, Seattle, Boston, Denver, and others, hundreds of thousands of jobs have been added, but only a fraction of the housing needed to support those jobs was actually built. And when more people chase the same number of homes, what happens? Prices rise. It's economics 101, but at a scale that has reshaped society. Next up, the financialization of housing. Since the 80s, homes have increasingly been treated not just as shelter, but as investment vehicles. You see, back in 71, the 30-year fixed-rate mortgage expanded access to home ownership for a lot of people, but it also allowed buyers to borrow more, which pushed prices higher. Mortgage interest deductions rewarded owners of bigger, more expensive homes. And as inflation fell back in the 80s, real estate became one of the most reliable wealth-building tools in America. And that pulled even more money into housing, and prices, they followed. For the decade of the 2010s, rates were historically low, and lower rates meant lower monthly payments. But it also meant that buyers could qualify for much larger loans, so buyers bid more, so sellers raised prices more, and affordability, even if borrowing costs were lower, couldn't actually improve. Ironically, low mortgage rates helped inflate prices, even as they made payments feel more manageable. The national home price to income ratio, although it's certainly high, hides the fact that there are huge regional differences. And as you can see here, across much of the Midwest, parts of the South, Homes still cost around 3 times the median income, and that's close to historic norms. But in California, the Pacific Northwest, southern Florida, the Northeast Corridor, and parts of the Mountain West region, homes often cost 8, 10, even 12 times the median income. For millions of Americans, the crisis is far worse than the national number suggests. Also impacting affordability is the fact that homes today are bigger and more expensive to build. Now, did you know that back in 1975, the median size of a new home was around 1,600 square feet? Today, it's over 2,200 square feet. And then we added amenities and granite countertops and features that all cost money. The true starter home, the modest 1,200 square foot entry point for young families, has largely disappeared because builders simply can't make the numbers work. And to top this off, there's been a cultural shift. Homeownership has become deeply embedded in the American dream. People stretch financially because they believe, often correctly, that owning a home is the primary path to wealth and to stability. And it's that willingness to take on higher debt which supports higher prices. And it creates what's called it's a feedback loop where expected price growth justifies today's cost. So where does that leave us? Over the past 50 years, the relationship between incomes and home prices has fundamentally changed. Homeownership is simply less accessible than it used to be. There's no single villain here. Restrictive zoning, underbuilding, financialization, interest rates, changing preferences, and wage dynamics have all worked together to get us where we are today. Understanding these forces won't solve the problem. I wish it could. But it is the first step towards implementing the serious solutions that are needed. More flexible zoning, incentives to build new homes, rethinking housing as shelter first, and addressing wage inequality. Why? Well, because a society where shelter costs 5, 6, 8, or 10 times what people earn isn't just inefficient, it's unsustainable. And that's what I think. If you found this interesting or even useful, please subscribe using the link below. And until next time, take care. I'll see you next month on Mind the Housing Market, where we'll be talking about another topic that's of interest to real estate brokers and their clients. Bye now.